I want to begin today by sharing with you something that Nelson told us the very first time that we heard him speak. He said that everything begins with the way that we think. Everything begins with the way that we think. And the fact of the matter is that most people would rather die than think. I think there was a slide that was running earlier in the slideshow that read something to the effect of, what was it, Richard, that you, at age 25, and you died at age 25, but you weren't buried until age 72. And that's because people just stop thinking. And there's all this noise and this nonsense that's going on out there in the world right now. This is one of the best times to be alive. There are so many great things and good things going on out there in the world. But do you think that the media wants to pontificate that? No, they want to keep you in a state of anxiety, a state of fear, because that's what drives ratings. Not all the good news stories. There's more money on planet Earth today than there has ever been in human history. So what does that mean for someone who is an entrepreneur? Does that spell opportunity? So you can be thinking in your own family that you're either in a place of scarcity or you're in a place of abundance. Where would you rather be? Scarcity or abundance? Oh, okay, I'm going to get participation today. Where would you rather be? Scarcity or abundance? Abundance! That's what we're going to be talking about today. How to make sure that you're in abundance. Does that sound good? Yes. Okay, good. Now this gentleman, R. Nelson Nash, just owe him such a debt of gratitude. Blessed beyond the definition of good fortune to be mentored by him for so many years. If you've listened to our podcast, you've watched us on the YouTubes at Banker's Vault, you've seen us on the Facebooks and the Instagrammies and the Tweeters and all those different social media platforms, we're always giving credit to Nelson because Nelson is who inspires us. And we want to transfer some of that inspiration to you because what a joy it was to know him. And we think about him every single day. And he has impacted our lives in such an immeasurable way that it's transferred to thousands, tens of thousands of people, just in Canada. And I'm also here to share with you today that these crazy Canucks now have an operation in the United States named LifeEva. So we will be serving Americans starting in January of next year. We're going to be transferring this message the way Nelson intended it to North America, not just Canada. Isn't that good? If you haven't had an opportunity, please visit nelsonnashfilm.com or dayofnelson.com. These are two great resources for you to get a deeper glimpse into the essence of just how remarkable Nelson was and the impact that he's had on so many. This is a picture of my late father on the right, and that's me right in the center, right here. And that's my dad's brother, my Uncle Tommy. And this is where my family grew up. We grew up in a small mining and forestry community of Timmins, Ontario. How many of you know of Timmins, Ontario? Show of hands. Wow, 2 people in the room. That's fantastic. No, I'm just kidding. There are a lot of hands went up. Born and raised in that community, my parents grew up in the early 1980s. I grew up in the early 1980s. My parents, they did a really good job arguing about money. They didn't do a very good job at multiplying it or keeping it in the family because they didn't know how. Nobody showed them. Does anybody remember in this room what happened with inflation in the early 1980s? Is that a period of time in your life that you look back on and you go, wow, those were great times? Inflation skyrocketed. Interest rates peaked at 21.5% if you were a prime customer at the bank. I've never met anybody who's prime, ever. And my parents struggled to keep the family home that you see here. And this home has a lot of good memories and a lot of painful memories for me. I will absolutely never, ever forget. You know the National Bank? The red part of their logo? So I'll never forget the envelope that my mom opened up because the logo of the bank was on the front of that envelope. And she opens the envelope, and we're standing right here in the living room of our home. And my mom takes a seat on the sofa. She opens up this letter, and she starts crying. And my dad said, "Darlene, what's the matter?" And so she gave the letter to my dad, and my dad got upset. And the letter was from the bank indicating, get your mortgage caught up or get out. We're going to foreclose on the property. And my mom looked at my sister and I and asked, what kind of Christmas gift is this? And so that is one of many reasons why I stand up here today, and that is one of many reasons why we've named today the Family Banking Summit. So that families with children, families will not have to experience what my sister and I had to go through and endure. Those are very, very tough challenges, not only for parents, but for kids. It's traumatizing. All I wanted was for my mom and dad to love each other and to get along. And my sister and I at that time had no conceptual understanding of why that wasn't happening. And so we can prevent that from happening in families. The family banking system, the process of becoming your own banker, the infinite banking concept. Had my parents known about that, things may have turned out differently. But I stand before you here today letting you know that for as long as I'm taking oxygen into my lungs, I'm going to be sharing this message across North America. I made a promise to Nelson 2 weeks before he passed, and I fully intend to fulfill that promise. Isn't that good? What are some of the most stressful events that can happen in someone's life? Anyone? Oh, loss of a child. Oh, yes, absolutely. I have 4 children myself. I can only imagine how devastating that would be. What else? Sickness? Yes, thank you.
You always experience loss of your home.
Yeah, loss of your home. Disability. War. Loss of a job. Divorce. Mental health issues. These are all things that if you think about over the course of your lifetime, I'll tell you, you're going to experience a variety of challenges. The last thing you want to be challenged with during periods of devastating moments in your life is financial challenges. Would you agree? Because if you were to talk to, are there any physicians in the room? Okay, we have a doctor in the room. What part does stress play in medical maladies in human beings? That's your whole being. Sir, you can attest, I haven't spoken to you. I didn't preempt you with this question. Nelson would share a story where he was speaking to a physician at an event, very similar circumstance. He had never met this gentleman before, and he asked the same question. What part does stress play in medical maladies in human beings? And the doctor, without hesitating, said, it all begins there. And so if you can create a peaceful, stress-free way of life by making sure that all of your finances, that you have cash confidence, that your family is taken care of, is that going to have a ripple effect in other areas of your life, including your health? Absolutely. Can I get a yes? Were they selling coffee out there this morning? We can get some coffee going for everybody. Now, we're going to be referencing Nelson's book throughout this presentation. If you don't have a copy, make sure you pick up a copy, but I'm going to be referencing some key elements from his book. Nelson told us that infinite banking concepts is not about addressing the yield of an investment. We hear that often. When people are initially doing their research on the concept, one of the most frequently asked questions that we have is somehow related to comparing it to some other form of investment. Infinite banking concepts is a process. It's not a product. The dividend-paying, participating whole life insurance contracts that we use are meant to be a tool to implement a process. And if you put the very best tool in the hands of an incompetent, and that's the very best tool to get the job done, not only is that person not going to turn out any good work with the tool, they're going to break the darn tool. And so when you're learning and on your journey of discovery about the process of becoming your own banker, remember, this is not about addressing the yield of an investment. It has nothing to do with that. It has everything to do with where your money resides before you begin to control how you're going to finance the things that you need over the course of your lifetime, which can certainly include investments. So this is a different way of thinking. Everything begins with the way that we think. Okay, on page 3 of Nelson's book, I'm just going to grab my copy here. How many of you, show of hands, have Nelson's book with you? Oh, wow, okay, good portion of you. Okay, on page 3 of Nelson's book, it reads, the whole idea is to recapture the interest that one is paying to banks and finance companies for the major items that we need during a lifetime, such as automobiles, major appliances, education, homes, investment opportunities, business equipment, etc. These are 3 vehicles that we have purchased through our family banking system. So the first one that you see here is a Ford Explorer. The second one is a Honda Odyssey. The third one is a Nissan Altima. And we've also just purchased a Sienna. All of those vehicles were purchased using our family banking system. Well, how did we do that? We had to get money inside of our dividend-paying, participating whole life insurance policies. Those policies immediately begin accumulating cash value. As a participating policy owner, you co-own the insurance company when you're dealing with a mutual company like Equitable. And as a co-owner, you have a loan provision. So you can request a policy loan from the life insurance company. And when you do that, the insurance company asks you 2 questions. Would you like us to electronically deposit that into a checking account? Or would you like us to mail you a check? There's no income verification. There's no credit checks. There's no questions regarding what do you need the money for? When do you plan to repay it? So that puts you in a position of total and absolute control. Now, for all of you who have been practicing this process for many years, you understand the advantage of total and absolute control. Some of you in this room have purchased not only vehicles, you've purchased properties, multiple properties. You've purchased business equipment. You've used your loan provision to access money from the insurance company so you could participate in a high caliber investment opportunity. And do you know what happens to your total cash value when you request a policy loan? Alan, can you say that again? It goes up. Is there just a little bit of volatility going on out there in the world right now? If you were to look on your personal balance sheet, the one asset that you can absolutely depend on increasing in value day in, day out, week in, week out, month in, month out, year in, year out, decade in, decade out, is your participating dividend-paying whole life insurance contracts. They cannot go backward. And what happened the moment that we drove these cars off the lot? What happened to the value of the cars? They went down. And so I'm kind of like an Uber driver, except I don't have to pick up anybody. I just get paid every day. My cash values keep going up. And God forbid, if anything happened to me, am I leaving any indebtedness behind to my family? And do they still get to own the very items that were purchased utilizing policy loan proceeds. Here is a key teaching point to get across, because there are many folks in this room who are just maybe beginning, or maybe they're just hitting their stride on their journey with this process. You're not using your own money. All of your money is growing in the form of cash value. And cash value isn't real. The insurance company doesn't have 400,000 separate vaults with all the policy numbers on it, and they add cash into it every day. That is a contractual guarantee. The insurance company is saying, listen, every single day, whether you like it or not, you can call us and ask us not to grow it every day, but we're going to politely decline. Your cash values must grow each and every day, because by age 100, what must happen? The total cash value must equal the total death benefit. It's a contractual guarantee. It's not a hope and pray. It's not a, hey, Billy, what's that latest stock or cryptocurrency you wanted me to invest in again? I'm really hoping for a quick win. We want stimulant. We want to be stimulated as human beings. I got news for you. This is boring. It is boring. And you know the one thing about infinite banking concepts that will always be boring? It always works. I thought the guy who wrote that part of the monologue for me, like he said I was going to get a big hoorah for that. Isn't that good? I am going to wake all of you up before my time is done up here, I promise you. Okay, now look, that's $148,000. $148,000. If I did not have more than $148,000 of total cash value, could I have requested the loan from the insurance company? No, they would have said, well, you're requesting $148,000, but you don't have that much to borrow against. So the more capital you put in, the more capital you get out. It's ridiculously simple. There are so many people out there in the world who are trying to sensationalize infinite banking concepts. They're trying to sensationalize becoming your own banker, because they're talking about the product first. Hey, you got to get your hands on this dividend-paying participating whole life insurance policy. It's way better than stocks, bonds, mutual funds, crypto. It's way better than anything else out there. What? It's just a tool. It's a contract. It's a unilateral binding contract. The insurance company guarantees the money. Nobody's guaranteeing you the time. Does anybody in this room know when they're going to die? But do you know for certain that someday that's going to happen? And so we can't guarantee the time, but the insurance company can certainly guarantee the money. We're driving around these vehicles every day, and we're repaying these policy loans on our terms, no one else's. The lien for the loan balance is on the death benefit of the insurance contracts, not on the cars. The loans are not reported to TransUnion. They're not reported to Equifax. They're private. In this case, we're talking about Equitable because Equitable is our primary carrier. Equitable is a mutual company. They are responsible to the participating policy owners. Can I get a hoorah from the participating policy owners in the room? Listen, hear me. You co-own a company that has never failed to produce a divisible surplus. Since issuing participating dividend-paying whole life contracts since 1936, in the midst of the Great Depression. What a great time to go, hey, maybe we should start selling dividend-paying participating whole life insurance contracts. This is a company that has never failed to produce a divisible surplus. Now, has there been a lot that has happened since 1936? Has there been a lot that's happened since Equitable began as a company in 1920? Let's think about that. We got the Spanish flu. That was pretty bad, wasn't it? But you know what? The actuaries at the insurance company learned a valuable lesson, and they said, you know what we're going to do? we're going to make sure that we have pandemic modeling built into all future engineering of these contracts. So when clients started calling us going, hey, we understand there's a pandemic here. What's going to happen to Equitable? Are they going to make it through this? The answer is not only are they going to make it through this, they're probably going to have some of their best operating years since the Spanish flu. Isn't that good? So they've built this pandemic modeling. So that's a company that is responsive only to the participating policy owners, no one else. There are no stockholders to be responsive to. When you're dealing with a publicly traded life insurance company, they are responsive to the stockholders first, understandably so. But we prefer that our clients deal with a private company so that your dealings are private, your loans are private, your life is private. How do you feel about that? Now, what else did Nelson say? He said, okay, he talked about automobiles. He also said major appliances. So this is a picture of our kitchen and dining room. All of these appliances that you see were all purchased with policy loan proceeds. $45,000. We've repaid the policy loans with interest. Now, we repay more interest than what Equitable calls for. So Equitable applies a simple interest calculation on a loan balance. We repay all of our policy loans at 10% interest. Equitable only calls for, currently, 6.2. 6.2. So what do we do with that extra interest? Any guesses? We reinvest it? What else? Oh my goodness. We got to talk to the coffee shop here and get them to put some more caffeine in there. We take that extra money and we put it into wherever our system will hold it. We buy paid up additions. We put that money into an accelerated deposit option. We get that money back into the company that we co-own. Because isn't it true that your money must reside somewhere? And isn't it true that at present, for anyone who's not fully implemented infinite banking, isn't it true that at present all of your money is flowing through the books of someone else's bank? Whether you earn T4 income, interest income, dividends, regardless of what your source of income is, it must reside somewhere. What better place to have it reside than here? Everybody wants the latest and greatest. How am I going to get that quick win? How am I going to multiply my money quickly? 15 years into this journey, our family, we no longer have to rely on a commercial bank for anything other than the convenience of debit. What a peaceful, stress-free way of life that is. We're going to show you how we do that today. Is everybody with me? Yes. It's not too early. Should they have put me on in the afternoon? Okay, all right. Now, Nelson also talked about education. So my son Jackson, our firstborn, he's 14 years young. He's taller than me. So when he's in full-on hockey gear, like this kid is a Sherman tank on skates. And he attends Vimy Ridge. So he gets to play hockey every single day, and he loves it. And we were able to take care of his education with policy loan proceeds. We repay the policy loan balances with interest. Do we only pay what Equitable calls for? No. What rate do we repay at? 10%. Now, why would we do that? Paid up additions, but the purpose is if we put more capital into our warehouse of wealth, do we have more advantage? But does Equitable also have more capital to multiply on our behalf? And if you are dealing with a company that has never failed to produce a divisible surplus, has never failed to declare dividends, how much of your capital do you not want residing there? Think about it. Remember, everything begins with the way that we Think. Could it be this ridiculously simple? Could I store capital inside of a mutual life company that I co-own? I didn't have to hire anybody, performance manage anybody, lead anybody. I didn't have to make operating decisions, develop strategy, decide where to put the money pool to work. I didn't have to make any of those decisions. All I have to do is pay premium. That's it. If I presented you with a business opportunity and I gave you all the characteristics that I just described, and then I told you at the very end of it, you don't have to do anything that I just talked about, all you got to do is pay premium. You would want to pay a little or a lot? A lot. Here's the way people think when they think about life insurance contracts. How soon can I stop paying the premium? And some of you in this room who have been practicing this process, you've asked that question because you haven't rethinked your thinking yet. The question you need to be programming into your brain is, how long can I pay it for? Because the more capital you put in, the more you get out. And the more capital that the company that you co-own has to work with, the better it is for you and for everyone else who co-owns that company. Isn't that good? Isn't that good? Oh boy. Okay. Nelson went on to say, homes is another item that you're going to need to finance throughout your lifetime. This is a photograph of our family home, and then right next door, literally right next door to our family home, we were able to, through the family banking system, my sister-in-law, my brother-in-law, and their 5 children live right next door to us. We keep family close. Do you know what really saddens me? Is that when I describe to people that we've been having family dinner in our home since April of 2008, every Sunday that we are all in town, our entire family enjoys a meal on Sunday together. The look on people's faces when I say that. They go, what? You do what? Gosh, we only get together with our family in December or at Easter or Thanksgiving. We do that every Sunday. We want to keep the family close. I have a severe, fear of loss. I lost both my parents passed away suddenly and unexpectedly. I want to keep my family close to me. And we want to not only keep family close, but we want to keep the money within the family close. We don't want that money being transferred away to someone else. Do you want to keep the money close in your family? Do you want to keep the money close in your family? Now, $1,025,000 of the total amount of capital required to make these properties happen came from policy loan proceeds. Isn't that good? These have been repaid with interest. Is that a little bit or a lot of interest? Do we want that coming back to our system, or do we want that flowing into someone else's to enrich them? You want it coming back to your system. The next is investment. So we've been able to, and all of the companies, I have an ownership interest in 11 different businesses, soon to be 12. Without Nelson, without the process of becoming your own banker, without the infinite banking concept, I wouldn't be saying that up here to all of you today. And in fact, one of our business, how many of you have ever purchased anything from Amazon? Okay, good. Yeah, keep that going because, we're in that business. Jeff Bezos and I get along pretty well. So there are a couple of, and I had no idea that these two guys were going to be here, honest to goodness. So one of our companies, Canada Prep and Ship, so I'm so proud of our team there. I really can't even articulate it. But 2 of our leaders in that business are here with us today. And I just want to bring them up to chat with us. So put your hands together for Curtis Keeping and Jonathan Prue. Come on up. There's John standing on a whole bunch of product, giving us 2 thumbs up And every single one of these labels that you see here is money. It gets affixed to a product, and that product gets shipped into an Amazon distribution center. Somebody purchases it, and then they buy again and again and again and again. And this business was born through policy loan proceeds. Both Kurt and John are participating policy owners. Both Kurt and John practice the process of becoming your own banker. So when we decided to get into business together, was there much ice to break? Not at all. And they understand the more capital we put in, the more capital we get out. Now, I hope that you're all sitting down. So when this business began, 2019, July, we're doing probably about $50,000 a month, give or take. Yeah. How much are we going to do next year? Give them the mic.
About 15 million. Between Canada and the US, 15 million.
Isn't that good? 15 million. Yeah, they're going to need more policies. That's why I brought you guys up here. We're going to put you on the spot to buy more policies. Okay. So, guys, tell us a little bit about, so John, you remember, so when we met each other at the annual Infinite Banking Think Tank Conference in Birmingham, maybe share a little bit about that story and then what led us to what is now Canada Prep and Ship.
Okay. Hello, everyone. I'm a little bit nervous. I haven't been around this many people in a while, but so bear with me. So I've been practicing infinite banking for quite a while now, about 7 years now, and I met Richard, who was my first contact to the infinite banking system. Me and Richard just immediately hit it off. There was just such a true to him, you know, so it was just a very instant bond. If anybody has sat in a room with Richard, you understand some of the first meetings that you might have had with him could be very intense, but I'm so grateful for all those because it's got us to this point, and I've been able to connect with so many great people through the infinite banking system, as well as Jason and everybody else, of course. So I just wanted to say I'm super grateful for the infinite banking and to be here today. So I'll start with that.
Awesome.
But when I went down to Alabama, I was fortunate enough to go there and meet Nelson. I believe that was right before, and so I was able to go there. I had a great experience. Richard showed me some of the great locations down there, and I had a conversation with you at the airport, and you're like, what do you do? And I said, well, I sell stuff on Amazon. And he's like, that's cool. He's like, what do you sell? I said, oh, I sell like chips and Canadian stuff in the US, you know. And he's like, yeah, that's pretty cool. And he's like, would you mind if I just, you know, maybe touch base with you every now and then and kind of see how things are going? And I was like, yeah, that sounds cool, you know. And then, you know, a year later goes by, and we're still trekking away. Myself and Curtis are working out of our garage, but his garage. I was actually staying at Curtis's basement suite, so for free. And so we were working out of the garage, you know what I mean? We were hustling and bustling. And, you know, later on, as we were slowly growing, Jason reached out, and you know, he's like, how's your business going? I was like, oh, it's good. We're growing. We're doing whatever it was. I can't even remember now, but a couple $1,000 or whatever it was. And, you know, obviously, again, there was a very instant bond. There's an instant trust, you know what I mean, just with the banking community. So there wasn't any really, you didn't have to, like, make sure I was good, you know. We just knew that there would be a good partnership just because we had the same minds and the same beliefs, you know. But the question was, what do you need to grow your business? And I mean, the obviously answer for me when I was staying in Curtis's basement for free was more money, right? So, so that's kind of where it started. And then obviously, you know, knowing that Jason had his own banking systems, and I had my own system that I used, you know, in my own life, but for my own cars, and I've had my own vehicles that I run through these policies now for many years, but I've never actually been able to experience it on a business level. And now we're even going further as even sourcing other people in the groups and other pools of capital to be able to grow the business even more. So I guess the experience of being around that type of people and that type of abundance really starts to transition tenfold when it started going into the business. So that was pretty it's pretty exceptional to even think I'm standing here right now. Actually, it's a bit surreal.
He had no idea he was going to be up here until
I had a
45 minutes ago.
Yeah. But yeah.
That's awesome.
Yeah.
Thank you,
so
John.
I'm greatly appreciative of Jason and his coaching. And just as Richard mentioned, the coaching, the honesty, the support. He uses the term, he knows when to hug and when to kick. That's very real, but I appreciate every moment of it. So greatly appreciated it, man.
Yeah, well, I appreciate you too.
Yeah.
Kurt, say hello to the crowd today. Ladies and gentlemen, Curtis Keeping. Say hi to Kurt.
How's everybody doing today?
How does it feel to go from a garage to a warehouse to a full team and to a $15 million forecast for next year? How does that feel?
Like John said, it's pretty surreal to be standing here because it seems like just a short period ago we were prepping and shipping out of the garage. Every single day we would be working together down in the basement. Rain or shine, we'd be out there prepping, shipping like clockwork to get those products down to Amazon. And then through the years of just grinding it out, teamwork, and a steady vision, we were able to grow the business, take a couple steps back in the hard times, because I'm not going to lie, those are always there. Those are always going to be there. You take a step back and you learn in those hard times, and you keep pushing forward and realize that you want to do anything big on a big scale, you need to attract the right people, and you need to grow a team, and you need space. So getting out of the garage and then coming through the different sizes of warehouses to the point where we're at today. I think we're in a 4,000 square foot warehouse, and we have plans to probably 3x that in our next space. So we're looking at something 10,000 square feet, 12,000 square feet. And that's just a tip of the iceberg. So yeah, it feels pretty surreal to be standing here in front of everybody today, just explaining that out loud. It's pretty awesome.
Now you got to go get it done. So I just want to recognize the both of you, not only for what you've been able to do through your embracing of the process, but also just being entrepreneurs, gainfully employing people, giving them opportunity, and growing into exceptional leaders. Nothing fills my heart with more joy in the business aspect of my life than seeing people who are coachable, who are accountable, who get it, and who have grown. And you've got so much more runway in front of you guys. I can't wait. Keep an eye on these two. They're up and comers, and they're just amazing. And I love you guys very much. It's such an honor to be in business with you. Thanks, guys. I appreciate you too.
You're awesome.
Thanks, man. Appreciate it. All right. Okay, let me get back to my talk now. We weren't expecting that. So we've gotten set up on a number of businesses where entrepreneurs, they reach out and they say, look, we see the success that you're having. We've got this business. We want to grow it. We need some help. We need some coaching. And my first question is, are you absolutely sure that you want that? And that's what I'm going to ask all of you here today. Are you absolutely sure that you want to create a peaceful, stress-free way of life financially? Are you absolutely certain that you want that? Yes. Okay, you need to be coachable. You need to be coachable, because the one element that you have to face that's going to either be an obstacle or an advantage for you is the way that you think. And if your coach is making recommendations and trying to help you be better, and you're leaning into that, are you going to get better? But if you're bucking against that, are you going to get better? No. Your coach is responsible to you, not for you. Anybody that you're working with on our team is responsible to you, not for you. Let's agree, getting a membership at the gym and working out there are two completely different things. Now, page 21 in Nelson's book, Nelson indicates that the very first principle that must be understood is that you finance everything that you buy. You either pay interest to someone else or you give up the interest you could have earned otherwise. The alternate use of money must always be reckoned with, Some call this lost opportunity cost, but it is amazing how many people give lip service to this fact, but they don't put it into practice in their own financial dealings. That's the equivalent of thinking that the law of gravity applies to everyone else but them. All that we do financially is accomplished by obeying the principles of the infinite banking concept. All that we do in our family. All that we do our very best to coach and educate our clients to do. Embrace the principles of the infinite banking concept and recognize that it's not an instant gratification anything. Human beings want instant everything. You've got a problem, you want it solved yesterday, just a little bit quicker. Right? You want instant coffee, instant food. When you order from Canada Prep and Ship on Amazon, you want the package delivered before you finish buying it. It's that instant gratification that we're looking for. Remember, no matter what's happening in the economy, no matter what's happening with inflation, no matter what's happening with interest rates or the real estate cycle, no matter what's happening with taxes or political turmoil, does the process of banking ever end? Does it ever stop? Because if it stopped, what would happen to the financial system? And are you going to need the use of money for the rest of your lifetime? And so it must reside somewhere. Agreed? What better place to have it reside than in your own warehouse of wealth? That's what you have to begin thinking about. How can I expand my warehouse of wealth? How can I gradually and incrementally get more capital flowing in to my warehouse of wealth? Isn't that good? Automobiles, major appliances, education, homes, investment opportunities, business equipment. That's a lot of principal and interest, all from shopping at home. We have 4 beautiful, amazing children, and we've let all of our children know, and you're going to hear from, where's Charlotte? Where's my Carly Bear? Charlotte, can you stand up? Charlotte is 10 years young, and she's here taking in the day, and she'll be speaking with me later today. Everybody say, hi, Charlotte. Now, all 4 of our children, what's going to happen is when our kids are old enough to really conceptualize infinite banking concepts in this process, and I'll explain to you what we do in our family and how we lead our family through that, our children are going to have a meeting with our family attorney. And the attorney, now I'm going to cast a vision into the future for you, so our children are older, they're young adults. Our attorney is going to sit down with our 4 children and say, hey, you recognize what your mom and dad have put into place with the family banking system. Today we have 63 policies in our family banking system. Now your parents wanted to have this meeting to give you a choice because they don't want to force you to embrace this process. They want you to catch it and they want you to really embrace it. So here are the choices that you have. If you decide to shop at home, meaning every vehicle you need, every business opportunity you want to pursue, post-secondary education, weddings, properties, business equipment, and so much more. If you shop at home and you borrow the money from the family banking system and you repay the family banking system with 10% interest, and that interest rate is not subject to negotiation, you're going to not only receive ownership of the policies that your parents have purchased on your lives, but you're also going to receive windfalls when your parents pass away, and those windfalls will be income tax free, and you will be reimbursed for everything that you've repaid into the family banking system. That's choice number 1. Choice number 2, if you choose to do business with someone else's bank, your parents will consider that to be a polite description of theft. And your parents don't do business with thieves. So if you choose to shop outside the home and do business with someone else's bank, your parents will assign ownership of the policies that they own on your lives to charitable organizations of their choosing, and you will receive no death benefit from any of the policies on your parents' lives. Take all the time to decide which option is best for you. And let us know that you acknowledge the understanding of those options. That's how serious we take this. Because remember, Nelson Nash said, when you purchase a policy, all you have is a tool. When you decide to become your own banker, now you've got a business. You have a business that didn't exist before. So you need to decide, are you going to run this like a business? As you think about your family, you need to make that decision. Am I going to run this like a business? This is what we've done in our family, and Charlotte can attest to it. She'll be speaking with me about that a little bit later today. Nelson said to me, this was in Kelowna, him and I sitting down to lunch, and he just leaned over to me, and I described to him, because he was always curious, hey, how are things going? How are things coming along with your implementation of the process? So I explained to him what we were doing, and he said, Jason, you have created perpetual motion in your family's financial world. We host annual family banking meetings. Yeah. Isn't that cool? Nelson said, you've got to learn how to run a business. Does everybody remember the grocery store? If you've read Nelson's book, do you remember the grocery store example? Yeah. He said, don't steal the peas. So he said, once you understand the grocery store example, the rest of becoming your own banker is a piece of cake. My wife, Rebecca, I have to give her so much credit. She is just so amazing. I just love her with all my heart. And she handles all of the tracking of the family banking system. So all of the policy loans, all of the repayment schedules, everything that we've done to treat this like a business, Rebecca handles all of that tracking. And she does an incredible job at it. Now, on page 25, Nelson asks, would you have much of a grocery store business if you were the only customer? Think about it. If all of you in this room owned a grocery store, would you have much of a grocery store business if you were the only customer who shopped there? No. So you have to build the business so that not only your needs are met, but so the needs of other customers are met as well. And when you go to a grocery store, you want to make sure it's well stocked. So when we practice family banking and our family members are captive customers, when they come to the family banking system, they want to make sure it's well stocked. With what? Money. So if we're accessing policy loans, can I get some water, please? If we're accessing policy loans and we're not repaying those policy loans, thank you so much, Jinjin. When family comes to the family banking system and there's no capital there, are we operating a good business? If you have customers that come into your grocery store and there's no milk, no bread, no butter, no eggs, are they going to shop there for very long? No. So whenever you want to access a policy loan, you have got to have a plan to repay it because you're operating a business. And you've got to get more capital on the shelf so that there's more capital available for more captive customers. That's why we repay our policy loans at a greater rate than what Equitable calls for. Isn't that good? Yes. Oh, boy. All right. This is a picture of one of our family banking meetings. We involve all of the children. And you would be surprised how quickly children pick up on this process. They pick up on this process much faster than adults do because children have a much higher degree of neuroplasticity. That's why it's so advantageous to teach a young child a new language at such an early age. And so the kids, get them involved early. The earlier, the better. Every single person that you see in this photograph is insured. People ask me all the time, especially people who are involved in the investment community, well, hey, why don't you put your money in mutual funds? Why don't you have your money in stocks or bonds? Why don't you have your money in this latest, greatest investment opportunity? You need to be diversified. You ever hear that word before? Anybody from Equitable, have you ever heard anybody on the street use those words before? You got to have diversification. You can hang out with the guys and gals on Wall Street if you use that word. Hey, what are you doing here? Well, I'm diversifying. Okay, good. You're a part of the group. Come on in. So what I do is I show people this photograph. And I say, I'm very well diversified in lives insured. Sooner or later, windfalls will come, because everyone in this photograph someday is no longer going to be here, is going to graduate. And when that day comes, and that day will come, there will be a tax-free windfall that comes back to the family banking system, which replenishes the system. And if we can keep that system in the family and not only transfer money to the next generation, but transfer the knowledge of how to be good stewards of the family banking business, are we honoring Nelson Nash's first golden rule, which is to think long range, which is to think 3 generations past your own? This is what he meant by that. He didn't mean just purchasing policies on every person that you have a beneficial interest in. He meant creating a family banking system so that you can transfer the system of policies and the knowledge. Isn't that good? That's why Charlotte's here today. That's why all of our kids participate in the annual family banking meeting. This was one that we had on our first trip post-COVID. We went to Cancun. We had a family banking meeting there. Now, take a wild guess how these vacations are paid for. Policy loan proceeds. Isn't that good? This is meant to be a system. So I'm going to show you something very personal here. Is it okay if I do that? Can you keep it a secret? I'm just kidding. You can take pictures of it if you want. It doesn't matter. Okay, so the Lowe family banking system. So we began our journey in terms of a system, right? We got our first policy, Rebecca and I think, in 2008. And then in terms of having a quantity of policies, began in 2009. So in 2009, we had 2 policies. As of October 20th of this year, we have 63. There are 20 lives insured. Total premium was $16,800 in 2009. It'll be $540,949 this year. Total death benefit was $500,000 in 2009. It is $32,043,851 today. I said to my wife, Rebecca, God forbid if anything happened to me, you have to pretend to be upset for at least 15 minutes at the funeral. Because whomever you end up with is going to get one heck of a signing bonus. Total cash value was $4,250 in 2009. It's $3,064,047 today. Loans, $300. Our first policy loan, when Equitable actually permitted a policy loan less than $500, our very first policy loan was for a car seat for our firstborn son, Jackson. Isn't that cool? We have $664,000 in policy loan balance today. That's both personal and business, because we, again, have ownership interest in businesses that collectively do a lot of revenue, multi-8 figures in revenue every year. Loan amounts available, we have $2,093,000 that we could access today. And we can utilize that capital for any purpose, and we can repay it on our terms. And the lien is on the death benefit. And what is happening to the death benefit? Every year, it keeps going up. So if a life insured is aging closer to 100, and the total death benefit keeps rising, what happens to the pace at which the cash value grows? It gets faster. But what happens to the premium? Can it ever go up? Can it go down? Yeah, because you're in a position of control. Accelerated deposit option. So we maximize the engineering of these policies to give you the greatest control, because that's what becoming your own banker is all about, being in a position of total and absolute control. Isn't that good? Loan repayments back to our family banking system were $330 in 2009. Now it's $40,000 a month coming back to the family. This does not include all of the borrowing from family members. I'm just talking about the immediate family, 6 people in our family. If we were to factor in all of our other family members who make repayments, this would be 6 figures a month. I want you to think about all the money that you've spent up to this point in your lifetime for everything. Can you write me a check for that amount of money right now? No, because who's got it? Someone else's system. Get that money flowing back to your system. Windfalls. None in 2009. We've had 2 death benefit proceeds. So this gentleman that you see here, Larry Mills, my late father-in-law, he passed away in September of 2020 after a very short battle with cancer. He served with the Edmonton Police Service for more than 3 decades. And when he retired, shortly after he retired, I said, hey, Dad, I want to get some life insurance on you. Because he kept asking, like, what exactly is it that you're doing? This is really, really interesting. And I said, well, I'd like to purchase life insurance because there's definitely a need there. Because God forbid, if you passed away, Nona still needs to take care of the house and take care of all the obligations. Let's make sure that we put some insurance in place to take care of that. And I said, look, you don't have to pay the premium. I'll take care of that. The death benefit will go to Nona. She'll be well looked after. She'll never have another bad financial day in her lifetime. And all that I expect in return, God forbid if the unthinkable happened to you, is all that I expect is to be reimbursed for the premiums that I paid. But while you're alive, I'm going to utilize the accumulating cash values as collateral so that we can expand the family banking system. And he said, well, I'm type 2 diabetic. I don't think I'm insurable. I said, well, there's only one way to find out. So we made application, we got him approved, and we got 2 policies. He was diagnosed with cancer many years later. We expected Papa to live a very long time. He was diagnosed with cancer, and 5 weeks later, he was gone. And those death benefit proceeds showed up exactly when they were needed the most. We took care of Nona. She'll never have another bad financial day in her life. We help her cut the grass. We help her keep the yard clean. We just take great care of her. This is what happens when death comes. And so Nona didn't have to worry at all. She took the time to grieve the way that she should. The family took time to grieve the way that we should. But now, every family banking meeting, we're talking to our children, the grandchildren, because a portion of Papa's death benefit proceeds funded a policy on all 9 of his grandkids as his legacy, something that I promised him, something that we've fulfilled. Okay, real quick. Nelson often said that what happens in the illustration is what you see. What happens outside of the policy illustration is the unseen. And if you are a life insurance agent, I want you to read that again. It's not about the product. It's about the process. I want you to have a glimpse into the unseen. This is a picture of a tree stump. Nelson sent me a photograph years ago of a tree stump that was of a tree that was cut down in the backyard of a property that he sold to his son-in-law. He said, I want you to use this in your talks. And I said, really? He goes, yeah, give me a call. I'll explain. So I called Nelson and he said, when you look at the tree stump, what does every ring represent? 1 year of uninterrupted growth. And he said, have you ever seen a tree contract? Have you ever seen that happen? No, because Mother Nature continues to feed it with nutrients and the tree just continues to expand. He said, I want you to think about that as it relates to your policies. What happens each and every year in the policies? Another ring of what? Uninterrupted growth. And the circumference of the tree just keeps getting bigger. So each year that dividends are declared by the insurance company, what happens? They're declared on a bigger circumference. Isn't that good? The system just keeps expanding. You may hear people say, hey, even in the insurance company, this drives me absolutely nuts. Remember, dividends are not guaranteed. The correct vernacular is, the only dividend that isn't guaranteed is the one that hasn't been declared yet. Because once a dividend is declared, it is contractually guaranteed to be paid. It can never be repossessed, and it can never lose value. In 2012, this is one policy, $20,000 a year in premium. $20,000 a year. The policy began growing. My twin daughters were born, one of which is here today, Charlotte. That's a picture of me holding my twin babies after they were born. In 2013, we received our first dividend. That dividend purchased paid-up additions. The policy grew. In 2014, we took a family vacation, received our second dividend, purchased paid-up additions. Family vacation paid for using policy loan proceeds. 2015, we purchased a car, third dividend paid, purchased paid-up additions. 2016, fourth dividend, more paid-up additions. 2017, another car, another dividend, more paid-up additions. 2018, another family vacation, another dividend, more paid-up additions. 2019, another family vacation, seventh dividend, more paid-up additions. 2019, already covered that. 2020, an eighth dividend, paid-up additions. 2021, another car, another dividend, more paid-up additions. The dividends that get declared are declared on every ring of uninterrupted growth. Everybody say, ooh. Ah. $20,000, and look at, so this is $20,000 in annual premium. Look at everything that we've been able to accomplish with just one policy. Just one. Just one. Did we create a lot of great memories on those vacations? Did we create a lot of great memories in the vehicles that we're driving with all of our screaming kids and me threatening to turn the car around and we're going to go back home if you don't stop screaming back there? That's all part of it. If at any point we drove through the wrong intersection or got on the wrong airplane, would we have left any debt behind to anybody? And there would have been a tremendous windfall of tax-free money that shows up exactly when it's needed the most. The only loser in that scenario is Revenue Canada. All right. Hey, you like this picture? This is, so John, one of my business partners in Canada Prep and Ship, so John is a Muay Thai expert, so do not upset him today on any coffee break. But this is John punching a banker right in the face. And so we're taking the financial energy away from outside lenders and we're redirecting that energy back to our own system. That's the outside lender, that's you. The more we do that, the more capacity we create. Now, I'll wrap up real quick, Moses. I know that you need me to wrap up, but I'm going to take a few more minutes anyway. So on page 15, Nelson said, "It all reminds me of a phenomenon in physics. I want to take a pail of water to seaside, so I want you to imagine you're at seaside, you've got a pail of water, and I want you to heat that water up to 210 degrees Fahrenheit. All that you have at 210 degrees is what? Boiling water. But as soon as that temperature gets to 212 degrees, you've created live steam. Now, what did live steam do to the Industrial Revolution? Did it change the way that our economy functions forever? So Nelson said, the steam engine changed the world, but it doesn't happen until you get past 212 degrees. Lots of heat goes into the process up to the boiling point, but then the dramatic power comes on suddenly. Here's creating live steam. That same $20,000 policy, now back when that policy was created in 2012, we could only put in $5,000 of accelerated deposit option. $15,000 was the minimum premium required. Today, that would be the complete inverse. The minimum would be $5,000, the accelerated deposit option would be $15,000. So today it's even better, but back then it was great. Now, 2012, total premium deposited $20,000. 2022, $200,000 has gone into the policy. Starting death benefit was $721,000. Total death benefit is $1.114 million today, rising every year. Total cash value, $4,500 in 2012, $220,948, and going up how often? regardless of what was happening with the pandemic or the economy or the political turmoil or anything? Can that cash value not go up? It must, every single day. Loan balance was nothing in 2012. It's $46,000 today. Loan amount available was $4,050 in 2012. It's $145,000 left as loan amount available today. $20,000 in premium in 2021 generated $28,843 increase in total cash value. What percentage of interest would I have to be paid from a commercial bank to put $20,000 into an account in 2021, and in 2022, I've got $28,843. What percentage of interest would I have to be paid from a bank and pay no tax on it? So I want you to understand, this is the live steam that Nelson's talking about right here. The more capital you put in, the more capital you get out. What did I have here in 2012? I just had a pot of water at Seaside. I just started to heat it up. Right? Do I have live steam in this policy now? Better believe I do. This policy is humming along at 212 degrees Fahrenheit. It's live steam. Every dollar that I put into this policy produces more than $1 of accumulated cash value, which produces more than $1 of loan amount available, which produces more capital for me to take advantage of high caliber opportunities to grow more capital. Yeah. Okay. This is at one of our family dinners. So this is Jen looking at her son Ethan, and he says, hey, one of our family members just texted me saying, I don't know if I'm going to repay that policy loan. Look at the look on Jen's face. And there's Anna Grace going, Dad's going to be pissed off when he hears about this. But this is what we talk about. And on page 85 of Nelson's book, point number 3, I just want to read this to you real quick. Nelson says on page 85, point number 3, he says, when you get paid for your work, you put all of it into someone else's bank, and then you write checks from that account to buy the things you need in life. So someone else's bank gets all your money. If you owned a banking system, wouldn't you want to run all of your business through your own bank? If this is so, then life insurance premiums paid each year should ultimately equal annual income. Any underwriter in this room needs a defibrillator right now. This can't be done immediately. It will take the average person about 20 years to reach this level. If this message is taught to succeeding generations, then a perpetual banking system can be achieved. Here's what most people misinterpret from this point. Nelson is not saying that equaling annual income means that all of your income should flow through a policy or a system that's only on your life. Did you grasp what I just said there? So if you're earning $100,000, $200,000, $300,000 a year, it's not about creating a system that's going to accommodate $100,000, $200,000, $300,000 a year where all the insurance contracts are on your life. What do you have to diversify in? Lives insured, so that you create a family banking system, so that the windfalls that come are not just from one life that is insured. Isn't that good? These are our 4 children. This is a bit of an older picture, but I want you to know we teach kids about this character, right? Do we not? We teach kids about the Easter Bunny. And we feed them with a bunch of chocolate and then stress over the dental bills. We teach kids about the Tooth Fairy. We teach kids about money. Let's teach our children about this man. Because this man is real. This man is the reason why I'm standing before you today. This man is the reason why all of my teammates, who I am privileged to work alongside each and every day, get the great work done that they get done. I want to acknowledge all of my teammates. I'd like to start with our marketing team. Where's our marketing team? We got Moses, we got Devin. Give Moses and Devin a big round of applause. I'd also like to acknowledge our client success team. Anyone on our client success team, please stand up. They provide client services. They take in new applications. They answer all your questions. They help. I'd like to acknowledge my amazing assistant, Lana, who I just really can't thank her enough each day for tolerating me. Everybody give Lana a big round of applause. We've got folks from our operations team. We've got folks from HR who do all the great work in looking after our group. We've got our strategic assistant team. All of our strategic assistants, please rise. Give them a round of applause. And our authorized infinite banking practitioner team, who are just the most amazing people on the planet, along with my amazing co-host of the Wealth Without Bay Street podcast. So our entire team, please rise. Let's give them an amazing round of applause. You're all awesome. Okay, I'm going to wrap up with this. So Caitlin, one of my twin daughters, she said, her words, not mine, she said, my dad put life insurance in place for me, not on me. Isn't that conceptual? So she has 6 policies in force. She's 10. She has $1,197,000 death benefit that's rising every year. She has $45,000 plus in total cash value rising every day. She will never see a commercial bank for any financing needs in her lifetime. She will never have to deal with lengthy, nosy credit applications. She'll never have to deal with bankers. She'll never have to deal with personal guarantees. She will have a stress-free, peaceful way of life financially. You can do this for your family as well. This is my nephew, Ethan. That was his signed copy of his first loan agreement. He bought a car. Then he decided that he wanted to become a mechanic, and then he decided that he wanted to start selling the cars that he bought. This picture was taken last week where he had purchased a vehicle for $2,900 and he sold it for more than $4,000, and he brought over this stack of cash and he said, "Uncle, I'm putting this in the family banking system." And then he says to me, "I really think that I've got a business here." He's 16. So he texted me the very next day with another deal for another car that he knows he can fix and sell for more than he purchased it. Where's the money going to come from to keep this perpetual motion going? Policies. He's 16. There are some adults out there today who aren't getting out of bed. And he's talking about multiplying money and keeping it in the family. This is my nephew, Evan, signing his first loan agreement to buy a computer. He's already repaid that policy loan. He's ready for his next. He's 14. This is my son, Jackson, who I was telling you about. Jackson has initiated and repaid a number of policy loans. He's 14. His first policy loan was accessed when he was 11. My twin daughters have yet to access their first policy loan, but they participate heavily in our annual family banking meetings. My oldest daughter, Anna Grace, same for her. There are so many advantages to this process, but I need you to remember one thing. If you haven't yet identified why you're practicing this process, you have an opportunity to do that. Once you identify the reasons why you're doing it, don't ever lose sight of those reasons why. Because if you lose sight of your reasons why, all that you're going to remember is what you purchased from Ascendant, not why you're doing it. Does anybody know Simon Sinek? Have you read his book, Start With Why? Show of hands, how many know who Simon Sinek is? Oh, cool. I know him too. I met Simon, I was at an Equitable Life leadership conference in Chicago. And I had the privilege of speaking there and of being recognized there. And I went to a restaurant and I looked across the restaurant and Simon Sinek was sitting there eating lunch. And so I called the waiter over and I said, whenever he's ready to go, I'm going to pick up his check. I'm going to take care of it. And I had hoped and prayed to God like he wasn't ordering expensive wines or like, you know. So you should have seen the look on his face when the waiter approached him and he wanted to clear up the check and he wanted to obviously say, hey, I'm ready to go. And then it was one of these. Then he gets up and he walks over, shakes my hand and sits down. And we had a great conversation. He gave me a beautiful coin. He talked to me about how impactful that was. He said, nobody's ever done that for me before. And he's a really popular guy. And he promised me that he would pay it forward because that's what I asked him to do. I said, I'd love for you to surprise someone and do the same thing. Create a bit of a ripple effect. Isn't that good? Start with why and ensure that your family and friends do as well, okay? You've got to set this vision for your family. That's up to you. We'll coach you. We'll help you do this. And I promise you that if you're thinking to yourself, I wish I would have known about this 10 years ago, you can't say that 10 years from now because you're here today.